Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, February 18th at about 2:30 p.m. Eastern. Well, U.S. stocks indexes are falling today, heading for a second consecutive losing week as the Russia-Ukraine conflict looms. Some of the volatility today, however, can be attributed to the trillions of dollars in options and futures on stocks, indexes, and ETFs that are set to expire. Option expiration days, which generally occur on the third Friday of the month, can cause the market to swing in a wide range as these positions are closed out. And on that note, let's move on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 Spider, SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. So the SPY's last all-time closing high took place on January 3rd at $477.85. That's about $47.78 on the S&P 500 itself. Now, when I captured this chart today, the SPY was trading at $434.08, or about $43.40 on the S&P 500 itself. Now, in January, after making this all-time high up here at $477.85, as you can see, it's been a pretty exciting ride ever since. The SPY started falling down through the red line, the 20-day moving average, the green line, the 50-day, tried to climb back up again, but could not hold this little short uptrend here, then fell below the 50-day, actually down to through the 200-day moving average, coming to a stop here at about 426 to 430. This is the consolidation zone that it formed. That's a good thing. It means that price had been falling dramatically, but now the buyers are coming in, and enough buyers are coming in to hold it at this level and consolidate. And interestingly enough, this is about the same level we had back in September of 2021. So price did hold here. Then, of course, as we see, it moved back up over the 200-day, thinking it could rally back up, kind of got close to the 50-day. The 50-day said, oh, no, you don't. Price fell back down to the 444 zone, then tried to move back up over the 50-day, and once again, especially with the Ukraine Russia situation, with inflation being as ornery as it is, and some other situations we have going on now, the market fell down and especially started falling down this week. So now the SPY is back down to this consolidation zone that had formed in 2021, and the market bounced off of it. Now we're back to this 426, 430 line again. And now we have to see if the SPY can hold above this line here. And I put a red highlight here to show it to you. Now look, there's bottom fishing is a good thing as long as I believe that it's all right, as long as the SPY, for example, can hold this zone here at 430, 426. If you see stocks that look like good bottom fishing candidates, fine. But if the SPY falls below this zone, please remember that during down markets, 4 out of 5 stocks will follow the SPY lower. And also please remember that your chief goal as a trader is to protect your capital at all times. So I get now that all the talking heads on CNBC are saying, yeah, you just buy here, and you'll be fine. Well, guess what? There's such a thing called a falling knife. And they were saying that last week too. And for everybody who bought, a lot of people either got stopped out or kind of wish they hadn't. So what I'm waiting to see here is if the SPY can hold here at 426, 430, then yeah, I might choose to start looking at bottom fishing. But if it can't, if the Russian-Ukraine situation heats up in the next week. I know we're looking now into March as the Fed will want to start raising interest rates. Inflation's crazy. We've got a lot going on. I'm not in the mood to catch a falling knife. So we will see what happens here, but do keep an eye on the SPY. And if you do get into any bottom fishing positions, please remember that you want to protect your capital at all times, because if you don't have your capital anymore, then it's game over. Let's look at our next chart here. Our daily chart here is of the Invesco QQQ, symbol QQQ. As you all know, this is the tracking ETF that closely follows our NASDAQ 100 index. Very important index. Now, the top stocks in that are components. A lot of them are Apple, Amazon, Microsoft, Alphabet, Facebook, Netflix, and all of those stocks that I mentioned, Intel. Oh my gosh, they're all falling. Currently, they're all falling pretty hard. Will there be a buying point? Sure, at some point. But right now, I'd like to be cautious and watch the QQQ. Now, the last time it made an all-time closing high was on November 19th at $403.99. We can call it 404. It couldn't get back up to that closing high again in 2021. And in the first part of January, like the SPY, it fell, but fell at even a steeper pace as all of these big momentum stocks kind of blew up and fell. So the QQQ fell dramatically. It fell down to these lows here at about 340, 335, 340. Tried to move back up, get back through the 200-day moving average at 367. Couldn't hold there. Fell back down, tried to rally back up, could not do it. And then with the Russia-Ukraine situation, these stocks and inflation and a number of other reasons, these stocks just fell pretty hard. Now we are back to this consolidation zone, back down to this 340 zone that price has created. Again, bulls are pushing up and saying, yep, we're going to buy here. This is good. Bears are pushing down and saying, well, that's tough. And the situation is now that it's consolidating. Well, we're back down to that point again. And the question is now, are the bulls going to say, okay, we're going to buy again here? Now, if they put their hands in their pockets and say, we're not going to buy again here, and price breaks down below 340, then we could certainly have another leg lower. If it holds, that'll be a good thing. And if it starts back up, good, then maybe I might look at some bottom fishing candidates. But right now, I'm kind of steady here over the weekend. I like cash at the moment. That's just me. So I want to see next week what happens here. Again, QQQ needs to stay above 340, and please, again, be extremely careful if you go bottom fishing, and remember that your primary goal, again, is to protect your capital at all times. Okay, our final chart today is a chart of the iShares Silver Trust, the SLV. This follows the price of silver, this fund. Please know that this fund is a commodity fund, and profits or losses are going to be taxed differently than a stock. Now, it's a favorable taxation, but if you or your accountant need to know, but you do need to know how to calculate it. So to make it easier, if you want, you can trade this particular commodity fund, if you like it, in a tax-advantaged account like an IRA, and then it won't matter. So now let's go on to our trade. Now, please know that before I get into a trade, especially if I'm hoping to hold it for a longer period of time than just a few days, I like to look at a longer term chart. So I'm just going to tell you, I looked at a monthly chart before I decided on this trade, potentially this trade. And I looked at a monthly chart, so you won't be able to see it on this chart. I'm just going to tell you that in April 2011, so this SLV made an all-time high at $48.35. It headed lower from there and fell to about $13 in 2015. Then it consolidated through 2019, then started climbing, reaching a high in February 2021 at about 28, and you can't see this on the chart. Since then, it fell down gradually down to 20, and we're looking at it now falling in September 2021 to about the $20 range, finally making a move back up, then actually accelerating into up to the 200-day moving average in November, then fell back down, as you can see, back down to this 20 zone. Now I'm looking at a longer term chart. You're going to see that that 20 price level has had support there before. Then it made a higher low up here, like about 2040, 2030, 2040, held there. So we're making higher lows here. And then what we can do is we can take our crayons and we can make a trend line that goes like this, a short-term trend line. We can look at the 200-day and said, well, it has really done a great job of creating an upper trend line here, a channel line. So now, question is, can silver, base metals have broken out. Silver is both used for industry and precious metals. Can silver break out here? And as you can see, this is kind of a bottom fishing trade. I'm just not, as of today, willing to get into any more risky than this. Today, the SLV is trading at $22.15. It's trading above its 20-day, above its 50-day. The 200-day is coming in overhead at $22.55. So I'm going to say in the coming week, if the SLV can stay above the 50-day line, you see right here coming in at $21.24, I'd like for it to stay above that. And if it can do that in this coming week, I will buy a small position for my trading portfolio. I'm going to put my stop down here at $20.25. If you want to make your stop higher under the 50-day, you're certainly welcome to do it, or even lower if you like. But I like that 20-25 line there. Now, if in the coming weeks, if and when, with a big if, of course, if the SLV can rise to close above the 200-day moving average, that'll mean a breakout. And that number is $22.55. So if the SLV can rise and close before over $22.55, I will add more to my position. And of course, by then my stop will be a trailing stop. So you may want to keep an eye on the SLV in the coming week. Now, please know that this is the perfect time to invest in yourself. Maybe take a few days off and check out my online training programs so you can become a better trader. These programs include our flagship training, 7 Steps to Successful Trading, how to swing trades successfully, trade the trend to profits, which is going to come in really handy when the market starts up again. You can kind of go bottom fishing here and just hold the stock with the parameters that I give to you here. Great for beginners, how to read charts, 3 winning setups, and another one that's going to come in really handy here in the next few weeks or so is bottom fish like a pro. These programs are timeless and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link up here on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.